CNBC parent company Versant is going to be spun off from Comcast as an independent, publicly traded company as of today. Of course, Versant includes CNBC, MSNBC, the Golf Channel, USA Network. I'm thinking now of Rotten Tomatoes. Fandango. There's some a whole number of fascinating and interesting brands. Sci-Fi Channel, and then rights to things like the WNBA, NASCAR, Premier League, and other things. Joining us right now is LightShed Partners co-founder Rich Greenfield. We've been talking about this prospect now for close to a year, more than a year.
Takes a while.
Takes a while for these things to happen. The stock is going to come out this morning. I think it's you get one share for every 25 shares that you own in Comcast. How does it trade? How do you value it? How do you think about what's about to happen next?
I think it really comes down to what Mark Lazarus, the CEO of Versant, what the strategy is going to end up being. I think a lot of investors just assume, hey, Versant's being spun out from Comcast, and it's going to be combined with something, whether it's Discovery Global, which WB, Warner Brothers Discovery, is trying to split off. Like, everyone just sort of assumes that this is just going to be yet another piece or pawn to merge with somebody else. And I don't think that's the plan. And I think it's going to take time for investors to understand that Versant has a different strategy than what we've seen in media, because the long history of media has been, hey, let's just jam more and more cable networks together. And as we've seen, Andrew, that hasn't really worked for anyone in the sector over the last decade.
So you've heard the strategy. There has been a presentation about it.
Yep.
Are you a fan of it? Do you think it can work? And in terms of if it's a show me situation, how long do you think that the management has to show me?
Well, look, it's going to take time. In the near term, right, there is the obvious headwinds. Cable network subscribers to linear cable networks are declining. And we're seeing more and more smaller bundles. I mean, we're going to see, you're going to see things like YouTube TV launch smaller bundles in 2026, right? So there's going to be more and more pressure, not so much from people leaving the bundle entirely, but from smaller bundles. I think that's going to be a major, major theme of 2026 is this cord shaving. And so that's going to hit not just Versant, that's going to hit every company in the ecosystem. Right. So what Versant needs to do is to show that it can find new ways to grow, new businesses to build, like a Golf Now. How do they take these assets, like the CNBC that we're sitting here, and figure out businesses to leverage that grow within the financial world that are not cable networks? Because buying more cable networks or investing more in cable networks is not going to appease investors.
Lazarus has explained it succinctly. I can read it exactly what he said. This is a big, profitable portfolio which has been historically managed with different priorities. And we know what those were. Investing to build these brands was simply not a priority.
Correct.
That won't be the case anymore. And we all have worked here and we've seen it. We have funded, our cash flow has funded a lot of ventures for the parent NBC, Peacock, whatever. And not given back to try to bolster.
I mean, look, Peacock's now lost, what, $11-12 billion since launch. I don't think most investors believe Peacock is a great long-term business. I think if you were to ask most Comcast investors, they are not fans of Peacock.
Yeah,
and so redeploying that capital and thinking about how do you take the cash flow and either return it to shareholders or invest it in businesses.
So that's my question. My question is, there's two pieces to this. What would you like to see them buy when you say invest in? I assume we're talking about acquisitions. If not buying things,
building
things, would you like to see them? There's going to be a dividend. Would you like to see a bigger dividend? Do you want to see buybacks? Is that helpful to you? Is it not helpful to you? How do you think about that? And then the last piece, which I actually think is actually critical, is there's a sort of view in the industry that the bundle effectively, or cable subs, go to zero. I have a view, which you may disagree with, that that's actually not true, that there actually is a much higher floor than is being described. Where do you land on all of those things?
There's a lot of people out there in the industry that talk about a floor. I don't think there is necessarily a quote-unquote floor. I think that's it's misunderstanding what's actually the problem, because we're not talking about one set bundle. It used to be everybody had one bundle. It had basically every channel. Sure, you could buy HBO or Showtime when Showtime existed, but basically everyone took the same thing. Now we're getting to a world where everyone is taking different bundles, and what's in those bundles are different. And so you may see some bundles, Comcast now has bundles with sports and news channels that don't include other channels. YouTube TV is going to launch the first sports bundle that doesn't include news channels. And so as you start to recompose the bundles, the idea of what the floor is going to be by channel. And so there may be some channels like broadcast networks that have a much higher floor because you need those to have all the sports. When you're thinking about just pure cable networks, whether it be, think about a Bravo, think about a USA, think about an MTV, they may not be in all of those bundles, so the floor will be lower. And so I think from that standpoint, you're going to see a change in how people talk about that floor. They're going to talk about it per network rather than an overall
But, Rich,
floor.
what would you like to see Versant build or buy?
I think Versant's got to figure out. We all use, CNBC is on in my office every single day, all day. To Joe's point, it is an incredible asset, right? Everyone has to have CNBC on. But they haven't figured out how to build a digital financial business, right? Like, we don't use CNBC the way we use a Bloomberg terminal. I think figuring out, and the Golf Channel and Golf Now is a good example, but how do you actually take the brand and the IP and figure out adjacent businesses that are not linear cable networks that you can build with? Sure, maybe WBD spins off Discovery Global, and maybe there's an opportunity to buy a food network or something that fits very thematically with what Versant is all about. But I think just buying more cable networks to have more scale, that will be a failing strategy for Versant. They have to figure out how they go beyond cable networks and leverage the brands to do more with those brands. And I don't even know I honestly don't know what that is, Becky, because I don't think anyone would realize how big a business Golf Now is for the Golf Channel. But it's taking that idea and going, how do we extend these brands and figure out new things to do with them? That's what's going to make Versant successful or a failure from an investor standpoint. I don't think that happens in the next month or two. I think that's going to take time for Lazarus and your team to prove that to investors.